This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. Chapter 1, an introduction to accounting. It's only a brief chapter and you must read through it yourself, but just a couple of important points. First of all, on the first page, it says definition of accounting. Now, you don't need to learn a formal definition for the exam, but do be aware of the main work of the financial accountant. Firstly, there's the recording of transactions. That we need to record transactions day by day. Every transaction, we do need to make a record of it. But secondly, at the end of the year, we need to summarize all the information and produce the financial statements. The financial statements are the statement of accounting position, or the balance sheet, showing the position of the business at the end of the accounting period, and an income statement showing the profit or loss that we've made during the period. So that's really what the accountant's doing and what we're going to go through in the later chapters. The other important bit, though, is on page 2, where it says types of business entity. And as far as this exam's concerned, you should be aware of these 3 types: sole trader, partnership, and limited liability company. Now, first of all, what a sole trader is. A sole trader is one person in business on their own. Rather importantly, it's not a limited company. Just for example, one person decides to open a shop. Maybe they're selling records. They buy CDs, they sell CDs, they hope to make a profit, but they're not a limited company. It's just one person on their own. Because of that, it's the individual who owns the business. It's the individual who's entitled to all the profits, the owner, and the owner is personally liable for all the liabilities of the business. So if the business owes money, effectively it's the owner who owes money, it's the owner who's responsible. In law, the business and the owner are the same. There's no legal distinction. But for the accounting, clearly the owner wants to know what profit or loss the business is making, and so for accounting, we treat the business as separate from the owner. That's a sole trader. It's also known as a self-employed person. Exactly the same, one person in business on their own. That's the first type. The second type to be aware of is a partnership. And a partnership is effectively exactly the same as a sole trader, except that there are 2 or more people in business together. The 2 or more people, they're the partners, the owners of the business, and they'll share the profits or losses between them. And again, just like a sole trader, the owners, the partners, are personally liable for everything owing by the business. Finally, a limited company. And the important thing about a limited company is that here the business exists separately from the owners in law. The business and the owners in fact we call the shareholders, are separate in law. The company is formed, the company exists on its own in law, completely separate. The owners own the business, they're entitled to the profits. And the important distinction that creates is that the owners have what we call limited liability. And what we mean by that is if the company does collapse owing money, the owners, the shareholders, the most they can lose is the money that they've got invested in the business. The most they can lose, the most the owners can lose is the amount of their investment in the business. However, as I mentioned earlier, whatever the type of business, whether it's a sole trader, partnership, limited company, from an accounting point of view, we always treat the business as separate from the owners, and we prepare financial statements for the business, and that's referred to as the separate entity concept. Separate entity concept for accounting always we treat the business as being separate from the owners. So, check down that page, make sure you are happy about the three types. This isn't a law exam, so you don't need any more detail, but do be aware, sole trader, partnership, limited liability company. The rest of the chapter, well, there's only one page, page 3, have a read through yourself, the different people who use financial information.